Most women walk out of a divorce thinking the hardest part is over. The legal battles, the custody agreements, the financial division, it's all behind them. But what they don't realize is that the real danger isn't in what they lost during the divorce. It's in what they forgot to check after it was finalized. Because tucked away in old documents, outdated policies, and overlooked accounts are tiny details that can quietly unravel everything you've worked to protect. We're not talking about big, dramatic mistakes. We're talking about the kind that sneak up on you. When you get a medical bill you thought was covered, or find out your ex is still the beneficiary on your insurance, or worse, you lose something you didn't even know you needed. For thousands of women, these insurance oversights don't hit until it's too late. And by then, the cost isn't just financial. It's emotional, overwhelming, and sometimes impossible to fix. In this video, we're going to walk through 7 things most women don't find out about insurance until after the divorce is finalized. Each one might seem small at first, but together they can shake the foundation of your future. Stay with me until the end. Because the last one doesn't show up until you're in the middle of a crisis. And by then, all you'll be thinking is, why didn't someone warn me sooner? One of the first and most damaging surprises many women face after a divorce is losing their health insurance. Often immediately. If you were covered under your husband's employer-sponsored plan, that coverage usually ends the moment the divorce is finalized. Not in a few weeks. Not when you find a new job. It ends right then and there. And for a lot of women, especially those who stepped away from full-time work to raise a family, that sudden cutoff is more than inconvenient. It's terrifying. Sure, Cobra might be available, but it's expensive, sometimes $600, $800, even over $1,000 per month depending on the plan. And it only lasts a limited time. Most people aren't financially or emotionally ready to shoulder that cost right after going through a divorce. But if you delay or don't apply in time, you could miss the window completely and be left uninsured. One unexpected medical issue, one emergency room visit, one prescription you suddenly need, and it can wreck your finances overnight. The worst part? Most women don't find out about this until they try to refill a prescription or schedule a doctor's appointment and are told they're no longer covered. And by then, the clock has already started ticking. It's not just about finding new insurance. It's about doing it fast, under stress, and often without clear guidance from the court or your attorney. This isn't something most people warn you about. It's buried in the fine print, overlooked in the chaos, and pushed to the side during negotiations. But if you don't plan for it, if you don't ask the right questions ahead of time, you could find yourself alone, uninsured, and scrambling to protect your health at the exact moment you're trying to rebuild your life. After the divorce is finalized, most people are focused on moving forward. They want a clean break, a fresh start. But one of the most commonly overlooked details is what happens to life insurance policies. And it's a mistake that can cost you, or your children, more than you can imagine. Because unless those policies are updated, there's a real chance your ex is still listed as the beneficiary on your life insurance. Or worse, you're still listed on theirs, without knowing the policy has lapsed or changed. In many divorce agreements, especially those involving children, life insurance is supposed to serve as a financial safety net. If your ex is ordered to pay child support or alimony, courts often require that they carry life insurance naming you, or your children, as the beneficiary. It's meant to protect you if something happens to them. But the system only works if someone enforces it. And most of the time, no one checks. I've seen cases where a woman believed she was protected, only to find out years later that the policy was cancelled, the beneficiary was never updated, or the coverage was far less than what was agreed. By then, it's too late. If your ex passes unexpectedly and the policy still names a sibling, a parent, or even a new partner, the money goes to them. Not you. Not your children. And there's no legal rewind button. The same goes for your own policy. Maybe you set it up years ago when you were still married. Maybe your ex is still listed as the person who gets everything if you die. Do you really want that decision standing after everything you've been through? These are the kinds of details that get overlooked in the rush to finalize a divorce, but they can have lifelong consequences if you don't stop and review them now. There's a question most women never think to ask during a divorce. What happens if something happens to me? You're focused on dividing assets, figuring out custody, trying to rebuild, but very few stop to consider what would happen to their children if they passed away first. And that's where the next overlooked insurance mistake comes in. Failing to update guardianship plans and life insurance policies to protect your kids if you're no longer there. At one time it probably seemed simple. If something happened to you, your husband would step in. But after a divorce, especially one involving custody issues or strained relationships, that assumption may no longer feel safe, or even right. And if you don't clearly name a legal guardian in your will or update your policies accordingly, a court may decide who takes over. That means a judge, not you, could be choosing who raises your children, manages their inheritance, or even where they live. And it might not be the person you would have trusted. It gets more complicated with life insurance. Many women remove their ex as a beneficiary after divorce, which makes sense. But if they don't set up a proper trust or designate a legal guardian for their minor children, the payout from that policy could get tied up in probate. Or worse, end up controlled by someone they would never have chosen. Your intention may be to support your children, but without the right structure, the money could be delayed, misused, or completely redirected. And here's the part most people miss. This isn't just about death. It's about planning for the unthinkable, so your children don't pay the price for your silence. Updating your guardianship and life insurance after a divorce isn't just a legal task. It's one of the most powerful ways to make sure your kids are safe, supported, and protected, no matter what the future brings. After a divorce, it's natural to think in terms of what's mine and what's his. You've separated the house, the cars, the bank accounts, but one place where that division often gets skipped is insurance. And nowhere is that more risky than with your auto and homeowner policies. Because here's what happens more often than people realize. The policies stay joint. The names never get updated. And the consequences don't show up until something goes wrong. Let's start with car insurance. If both of your names are still on the policy, and your ex gets into an accident, even in a car you no longer drive, your name could still be tied to the claim. That could mean your insurance history gets hit, your premiums go up, or you're asked to explain something you had no control over. In some cases, the policy might auto-renew under both names, and you don't even realize it until a bill or cancellation notice shows up. It's the same with homeowners insurance. If your ex keeps the house but you're still on the policy, or worse, still on the mortgage, you could be financially exposed in ways you didn't agree to. What if there's a fire? What if a liability claim comes in? What if they stop paying the premium and the policy lapses, but your name is still attached to the property? You might not legally own it anymore, but the insurance company doesn't see it that way unless the paperwork is clean. Most women assume these things are handled during the divorce. But unless you specifically go through every policy and remove your name, update the address, and separate coverage completely, you could be legally and financially connected to your ex for months or even years after you thought it was over. And by the time a claim is filed or a bill shows up, the damage is already done. There's another financial landmine that many women don't even realize they're still tied to after divorce: being a co-signer on insurance-backed loans. And the worst part is, just because your divorce agreement says your ex is responsible for the debt doesn't mean the lender agrees. If your name is still on the paperwork, the risk still belongs to you. This happens more often than you think. Maybe years ago you co-signed for a car loan, a small business loan, or even a line of credit that required insurance as collateral. During the divorce, it's assigned to him. He gets the car, the loan, the payment plan, and on paper, it looks like his problem now. But to the lender, nothing has changed. If he misses a payment, defaults, or lets the associated insurance lapse, you're still legally and financially tied to it. What most women find out too late is that insurance-backed loans can quietly trigger a chain reaction. If the loan defaults and the insurance doesn't pay out, because it's been canceled, underfunded, or misused, you might suddenly be on the hook. Your credit score takes the hit. Your phone starts ringing. And all because of a loan you haven't thought about in years. This isn't about blaming anyone. It's about awareness. Because in the chaos of dividing assets, many people forget to close accounts, notify lenders, or refinance under a single name. But when you leave your name attached to someone else's financial behavior, you're still at risk, even if you're not the one making the payments. And when insurance is involved, that risk can feel invisible until the damage is already done. There's one type of insurance most people don't talk about until it's already gone: long-term care. And for women going through divorce, it's one of the quietest losses that can have the biggest impact later in life. Because while you're focused on the house, the kids, the alimony, something else is slipping away in the background. Many couples buy long-term care coverage together, assuming they'll grow old as a team. But after divorce, the policy often gets dropped, or worse, one spouse keeps it while the other walks away without realizing what they gave up. For women, this is especially risky. Statistically, women live longer than men and are more likely to need care in their later years. Whether it's in-home help, assisted living, or a nursing facility, those costs add up fast. And without coverage, that burden lands squarely on your savings, if you have any left. One extended illness, one slow decline, and suddenly everything you worked to protect during the divorce can be wiped out in just a few years of care expenses. Most women don't feel the loss of this kind of insurance until they're in their 60s or 70s and facing decisions about aging alone. By then, it's either too expensive to buy or you no longer qualify due to your health. That window of opportunity closes quickly. But during a divorce, nobody warns you about it. Attorneys are focused on property. Financial advisors are looking at bank accounts. And unless you specifically ask, long-term care just slips through the cracks. It's not just about having a policy. It's about having a plan. If your coverage was joint, or if your spouse was the one who handled it, you need to ask what happens next. Because losing that safety net quietly, without even knowing it, could leave you vulnerable at the exact moment you need protection the most. The final insurance mistake is one that doesn't show up on any divorce checklist, and yet, it can be the one that breaks you. Most women don't think about disability insurance. It sounds like something for construction workers or high-risk jobs. But the truth is, if you rely on your income to survive, whether it's a full-time paycheck, freelance work, or even child support, you're vulnerable. Because if you get sick, injured, or simply can't work for a stretch of time, who's going to cover the bills? After divorce, many women find themselves financially exposed. The safety net they once had, dual incomes, shared responsibilities, is gone. And while alimony or support might help for a while, those payments aren't always guaranteed forever. If you're working, but haven't protected your ability to keep earning, one unexpected diagnosis or accident could derail everything. And most people don't realize that health insurance doesn't cover lost income. That's what disability insurance is for, but by the time you need it, it's already too late to get it. It's especially important for women in their 40s and 50s, who are trying to rebuild their careers, start fresh, or support kids on their own. A temporary health crisis, back problems, a surgery, a serious illness, can instantly turn into a financial crisis if your income disappears overnight. And unlike life insurance, which is often discussed in court, disability insurance rarely comes up during divorce negotiations. It's just not on the radar. Until it's the one thing you wish you had. Protecting yourself after divorce isn't just about what you own. It's about what you can still do. Your ability to earn, to stay independent, to keep going, that's your real asset now. And if that disappears, you don't want to be left asking for help when you could have quietly secured it with one policy most people forget even exists. Looking back, the real danger after divorce isn't always what you lose in court. It's what you forget to protect once the papers are signed. Most women are so focused on surviving the moment that they don't realize how much of their future is still at risk. A lapsed policy, a missing name, a forgotten signature. It all seems small, until life throws something at you and there's nothing in place to catch the fall. Insurance isn't exciting. It's not the part of the story people talk about. But for so many women, these quiet oversights are the very things that determine whether they stay safe, secure, and independent in the years ahead. So take a moment. Go back. Look through your accounts. Ask questions. Make the calls. Because no one else is going to double-check this for you. And by the time you realize what was missed, it might be too late to fix it. If this video opened your eyes to something you hadn't thought about, leave a comment below and share one thing you're planning to double-check this week. Your experience might help someone else. And if you haven't already, please subscribe and turn on the bell so you don't miss the videos that could help protect your future. Thanks for watching, and we'll see you in the next one.